Greetings traders, this is Houston Strong from thetradingedge.org, and here is your market watch for July the 5th to the 9th, 2021. So if you're up here in Canada, hope you had a good Canada today, and if you're down stateside, well, hope you're enjoying your US Independence Day long weekend. So this coming trading week, we do expect to have a bit of a slower week because of this shortened week because of the US holiday, and I really believe that in a couple weeks time, we're probably going to get more volatility. So this past week, the markets continue to do what they've been doing, and that is basically to drift and grind higher. Now, I've been surprised a bit because I've been saying watch the DXY, the dollar contract, and we're seeing the DXY rally at the same time as equities. So that's been a bit of a head scratcher, but we'll talk more about that when we get to the charts. But going back to the point I was making before, in about 2 weeks time, so Tuesday the 13th, that's when we have, I believe we're going to have a good blip of volatility that trading week. So in a couple weeks time, we're going to have the beginning of earnings season, and on top of that we have the CPI number. So prepare for that, because that CPI number is going to be a big one. I think everyone's still waiting for that next shoe to drop, that next data point. Is inflation, and everyone is leading on this now, right? Is inflation transitory or is it persistent? And this CPI print will be an important one. So I think this coming week we're probably going to have a continued maybe drift or maybe a small pullback if things get too extended. But I think the real volatility will probably begin not this week but the following week, once we get into earnings and we get that CPI print. For this coming week, again, I expect a slower week. We have FOMC minutes on Wednesday, so this is not going to be anything too shocking. It's just the minutes. I think we already understand what's come out of the Fed already. They've been talking about their motivations already, so I don't think the minutes are going to reveal anything new, especially since the CPI print the following week will be more of an important data point than what already came out. And then, of course, we got jobless claims on Thursday. Always a good one to watch, because you typically can fade that, well, not fade it, but you can typically get a pretty good assessment of where the market's going to go, especially if you get a high print with that jobless claims number. As I've talked about in the past, the market's still, for the past year now, the market's still in the regime where bad econ news is good for the markets. So anytime you get a really, really high jobless claims number, that is, you get a lot of jobless claims, that's typically bad for the economy, right? You don't want to see a lot of people file jobless claims, but that's good for the markets, because in the roundabout way, it means the Fed's going to have to continue its loose policy to continue to stimulate the markets and continue to support the markets. So if you see a high jobless claims number, typically you want to be a buyer. It's just really that easy, and you're looking for pullbacks during the day to get long. So it's really that easy of a trade when you see a big, especially a big jobless claims print. You're going to expect people to show up and buy at some point. So that's it for the week. We have again the I think more volatility following next week, so we'll talk more about that in next week's video. But for this week, let's jump to the charts now, and let's talk about where we go from here, because it's an interesting picture, right? Everyone's been talking about this, so this is something I watch regularly, and you've seen me talk about this throughout the course of the videos, but now it's on everyone's radar, right? And that is the number of S&P stocks above their 50-day moving average compared to the underlying index itself. So SPY hit all-time highs on Friday. Look at that nice close on the SPY, up 0.76%. And we have a negative divergence here, right? So we have a series of lower lows on the number of S&P stocks above their 50-day. So, as I said last week, I pointed this out last week, and I had talked about this already, prior month, and saying this is our divergence. It's nothing to, you don't have to fear this thing until you get into a position where price can indicate a reversal. So right now, we'll talk about the actual price chart in a second. But as I mentioned last week, so last week, I talked about it here, right? So I talked about it right here. I said, this is actually, because last week we were down at 50-something%. The week prior to that, we were down here at 40-something%. So this is actually not bad anymore. So even though only about 67% of S&P stocks are above the 50-day, and we're getting all-time highs, you can see the trend is clearly higher here. So this had been actually quite ugly back here when you had a set of higher highs on the indices, but you had the number of underlying stocks well below the 50-day. But since then, as I said last week, this is only ugly if we don't see some catch up. And this past week we actually saw a lot more breadth coming in, and so if we continue to see this move here, and this, you know, number of stocks continue to break above its 50-day and stay above it, continues to elevate, this rally can go on a lot further. So this is actually pretty healthy now, as we're seeing more and more participation. When we were down here, and we're talking like sub 50%, that was a problem. But now we're back up here. We're at 67%, and that's actually not, you know, again, that's not fantastic, because we know we were up here, but up here is oversold as well. This is up here when you had 90+%. That's unusual, you know. So that was actually a high point. So again, we're right in the middle here now, and this is actually not significantly bearish anymore, as we have seen more in the past, where we've seen numbers where, you know, we had back here, we had lower lows. Now this thing turns over, that could be significant. But for now, this thing tries to play catch up with the underlying index. Yeah, it's not so bad. So let's go to the charts now, talk about the actual indices and the VIX itself. And what it boils down to is this. So we acknowledge, or I acknowledge, that there's actually a negative divergence now between the indices and the underlying, right? That doesn't mean you get short, as I've said many times before. That means it's time to, you know, it's a yellow alert, right? So you have a yellow alert now, and you have to watch for the potential for a larger price reversal. Once you get that price reversal, then that's something you want to take action on, because we have those confluence of things where you have weak price action and negative internals, and then it leads to typically stronger corrections. And so that's the playbook. So right now the VIX is going right in the lows. So this is, you know, significant, because this is actually not a situation that's sustainable for a long period of time. Going right in the lows, and it's now momo down on the monthly chart, right? So that's momo down. Two months now, so you get momo, so outside bar down. So this first, I guess you could call it trading week of the first couple of days of the trading month, we already broke below the prior month's low. So now we're momo down, 2 months down in a row now. Weekly chart, reversal of the prior week's chart. Sorry, not even reversal. It's 2 down red weeks in a row now. So this, again, only a couple of days of trading here this past week, but we now have you know, 2 lower lows there. So that's going right in the lows. And here, what I want to show is now you have to watch out, because we're getting extended to the downside. So this is what I was saying before. We're getting extended now, and this on Friday is actually a gap reversal. We opened lower, all right? So we gapped lower, and in that session, the buyers bid it back up again to close it right back in the prior day's range. That's actually a gap reversal, and you have to watch it now on Monday, Tuesday, because this is not a situation that is good for the buyers of the SPY, because sellers of the VIX, they got everything they could want when you saw that gap down, but they had no more selling pressure to keep price lower. So this is a really good liquidity, a good example of understanding liquidity and supply and demand. And so this now, I'm going to try to put on log here to make it easier to look at. Yeah, this now is significant. So now this coming week on Monday or Tuesday, we now have a realignment of our major time frames, right? So this blue line right here is our monthly and quarterly open. And now this purple line is our weekly open. So wherever we open up here this coming week, if we break above this Friday's highs, right, this will cause us to have a green week, a green month, and a green quarter, and that will be significant. So we might see some short-term profit taking in the SPY, and maybe a bit of a blip up here in the VIX, especially if the SPY gaps up and falls back into the range. We'll talk about that in the SPY chart. For now, you know, I just want to show you that there's actually a gap reversal or a red dog reversal on the VIX chart here. Now let's go to the VX contract, because again, the VX ETN is not a great vehicle to use in order to track the price action of the VIX itself, because we know the VIX ETN has issues with the way it is structured and that it naturally decays. So instead, let's look at the VIX futures contract, the front month. So the current month contract right now, inside month so far. Okay, so inside month on the VIX contract, did not make a lower low yet. Here on the weekly contract, this is what we're seeing. All right, so now it did a momo up, now reversal short. So now here we're waiting to see on what side of this tight week does it break. So this coming week, does it go week down? That'll make it 3 weeks in a row of lower lows, and if so, it's probably going to go after that pivot there. Otherwise, if it can break above that high, then perhaps, you know, then when we see higher prices on the VIX here. But like we saw on the VXX, see on the VIX futures contract. Of course, the VIX futures contract, you know, you can see here we had a big hammer, right? So buyers stepped up and bought it right back again to go right back on the range. So this is telling you, as price is going into highs, so then as the indices like the SPY and the Qs go into highs, now we have some folks getting a bit nervous and they're picking up puts, right? So the VIX is tracking that and it's showing that some folks are getting nervous and they're buying some protection here, and the VIX, you know, could have a little bump up to the upside. So watch for that potential now. As the VIX really extended to the downside, you may see a short-term pop. So what would that short-term pop on the VIX look like on the SPY? So let's do the reverse analysis, right? So now we'll look at the reversely correlated product, the SPY. SPY, you know, incredibly has had now, you want to count them, 9 consecutive higher highs and higher lows. 1, 2, 3, 4, 5, 6, 7, 8, 9. Can you believe it? 9 months of higher highs and higher lows. So, you know, look way back here, April the 20th, right? Sorry, April of 2020. And that's basically like looking back in the rearview mirror now, and this is just a small blip. We've forgotten, you know, that is, you know, it feels like another lifetime now, right? Since that bottom, man, look at the trend we've been in, and that trend has been, you know, it's getting, look at the rate of changes begin to diminish, but look at the angle and the steepness of that move, right? So what a move it's been. Clear uptrend now. So weekly chart right here, momo up. Okay, so momo up here, 2 green weeks in a row. Now we're tagging, so look at that. So we finished that week off, we finished the month of June off, we hit that upper band, right? So we tag the upper band right where we have the upper band, of course, is the average monthly range. So on the weekly chart I have that painted on there, and we see that we hit the average monthly range for the SPY right as the month closed out. So good week, good month for the SPY, right in line with its typical size moves. Okay, so now what do we want to watch for this week? Well, if the SPY reverses and breaks below this past week's lows, that's a momo up reversal short, and you have to watch out for it to fall back in again. Because now, once we have the new week, we're gonna have price open up wherever it opens up, and we're gonna have the month and the quarterly open over here, right? So the month quarterly open is gonna be up over here, and the week's gonna be up over there. If we open high and fall back in, then it's gonna be an issue, because then we're gonna have red weeks, red months, and red quarter charts, right? And that's going to be very hard to recover again during that trading week. So that's the scenario that you have to watch out for, especially since we have this scenario. We're going right into Bollinger Band highs, so not a red flag yet, but definitely a yellow. So this is a yellow flag. You have to pay attention now. We're going to Bollinger Band highs, and what do we know about that? Well, we know that it has to keep going, otherwise you're going to get a bit of a pullback. Could be a sharp one, but again, here's the low of this past week's low. If we break below this level here, 425.89, that causes your momo up reversal short on the weekly chart. Has to go through quite a bit of range though, right? So it has to come all the way back through here. Not an easy thing to do. So maybe this is the worst case scenario coming into this week. We gap higher on Tuesday when the market's open, and all of a sudden we fade back in again, right? Causing a gap reversal that maybe turns into a red bar here, or even an outside bar that pulls us back in here again. And somehow midweek or during the week, it comes back through the range and takes out the prior week's low, creating the momo up reversal short on the weekly chart with full time frame alignment at the downside, because there's your quarterly monthly open. If we break below that level there, we have a red week as well. That's full time frame alignment at the downside, and maybe we see some folks get stopped out really quickly to the downside. So that would be, you know, the worst case scenario there. Otherwise, this is trading with, you know, at this point, you know, we're trading Bollinger Band up. So if this thing keeps walking up here, that's a Bollinger Band walk to the upside. And, you know, you don't want to get in front of those things, because those things can run you over, especially if you keep having buyers step up. The problem is that that's weak structure, right? So it's one of those tricky situations there where you don't want to necessarily step in front of that, because that could be a train. At the same time, it's hard to get on board that train as well, because it's speeding. And if that train hits the brake really fast, then yeah, you got to watch out. So that's the picture for the SPY. So let's now fast forward a bit because the Qs kind of look the same. So Qs, once again, all-time highs. So congrats Q holders and SPY holders, all-time highs. Now we're looking at here is 2 green months in a row from the Qs right after having, we had this momentum hammer in the month of May, and we talked about it. That's a strong looking bar. We've had now 2 higher highs on the monthly chart. On the weekly chart, we've had 6 consecutive higher highs and higher lows. 1, 2, 3, 4, 5, 6. So look at that. We even get above the average monthly range for the Qs. So that's called range expansion. So things are actually progressing to the upside beyond their usual ranges. And so now we're right in that Bollinger Band on the weekly charts. Yellow flag. All right. So watch out for this here. It has to keep going. Otherwise, yeah, watch how this range breaks. You pop higher, it has to go higher. Otherwise, you pop higher, you come back in again. As long as you don't break below this past week's low, you're doing a Bollinger Band walk. I mean, who knows how far that can go, but watch out if it breaks that Bollinger Band walk. Okay, and here the daily chart, likewise, starting the Bollinger Band walk here. So on Tuesday when the markets open up, right? If you break above there, it has to keep going. Otherwise, you're going to get a little bit of a pullback here, and people who got too extended, who were chasing, are going to get stopped out. Because this is a bit of a look, you could say, that's a small mini breakout right there, right? That's a decent day on Friday, 1.15%. A break above this small, set of days here, the small high. So that's a breakout. Now, these guys are going to get faded really fast. If it pops up and fades back in, they're going to get stopped out really quickly. To me, it's extended. And you have to have a long stop if you're going to try to buy it up here. So again, you can go higher, but then you have to watch out it doesn't come back out, and then because it's going to stop them out really quickly. Okay, so Bollinger Band walk on the Qs daily and weekly chart. Let's see how far it goes. Dow now, Dow. Okay, the Dow chart slowly fixing itself after kind of a shaky beginning of June. But look, they repaired that chart in June, turned into what? A bullish hammer, just like we saw in Qs, right? A couple months ago, back in May. Look, Qs. Right there, exact same looking bar, right? That's May, and back to Dow, that's June. So if you break above June's high, yeah, guess what? That's a momentum hammer. We're going higher on the Dow. So what does that mean? Well, reflation trade comes back on again. If this thing breaks above that high, we're going to get more of these cyclical names working again. So right now inside month, but getting really close to breaking out above June's highs. Weekly chart is basically inside bar reversal that's slowly working itself out. Remember, we caught this already. We saw this last week here. Inside bar down, and I said all you gotta do is break out above that high. It happened last week, and now we're slowly making our way back up to take out that bar's high. The reason why we couldn't do it this week is because that's the monthly open. See that orange line? It acted as a bit of resistance. Couldn't break it above there yet, but this coming week we got a fresh, new weekly open showing up for us, and then see if we can break above that and maybe take out that pivot high. All right, so Dow does have this little momentum move going here now, but it's looking less extended than the Qs, but this is momentum. So momo up. And that's kind of bad market structure, because we know that if you're chasing here and you're trying to play the breakout, all it takes is a break below there, and people are going to get stopped out. It's going to come back in, maybe even take out that low there. So here, look at that, how strong that is. Average weekly range. That's that top end there, tags it right to the T. And that's this is the average weekly range, and that's we got exactly to that finish line. So hit the top end of that average weekly range, and that's where we close to all-time highs, but not quite there. There's your all-time high there at 351.09. Momo up now. Again, just watch to see how far the Momo up move goes. So we can clearly see the markets are strong. Again, they're getting a bit extended, especially if we see a break below the prior day's lows. Russell did take a bit of a break on Friday, so unlike the rest of the indices, Russell did give us an outside bar on Friday. So let's look at the monthly chart first. Right now, inside month, so we did have the inside bar reversal, right? Inside bar down and up again, so that's inside bar reversal long to the upside. Just waiting to take out that pivot high right now. Right now, inside month. So on the weekly chart, inside week. So even though it looked a little ugly on Friday, still inside week, right? So this is not bearish at all until you break below that low, right? You break below that low, then yes, watch out for lower prices. But we're gonna wait and see if that low gets taken out. If you do, yes, watch out, because then I'm watching time frame alignment, right? So are the charts aligned as pertains to their weekly, monthly, quarterly open? Okay, so here on Friday we get the outside bar, right? And right now we're trading with full time frame alignment of the downside, because there's your quarterly, monthly open, and that's your weekly open. So look at that, basically acted as as resistance. This is why we're always watching these levels, right? So here, you know, I give an example of opening up high and losing that opening level, right? So you open here, and if you drop in right away, that level is going to end up being the resistance line for the week, right? That's your weekly open. Okay, so this happens all the time. So if we open high on Monday, or sorry, Tuesday, I keep saying Monday, but if we open up high, we fall back in, that's going to create the red week, and it's very, very difficult to turn the week green once it starts off red. You know, it happens sometimes, but it's less common, and it's actually, you know, when you see those situations, it's in the court of the buyers to try to disprove that, right? So it's up to them. It's the you know, the weight is on their shoulders to try to turn things around. So it's just the nature of equilibrium there. So look, for instance, here we had high open here, right? So there's the green. It was a weekly open there. As soon as you lose that weekly open, you got a red week, right? Here's the opposite. You had a green week, you're strong, and they never touch that weekly open again, right? It's very uncommon where you lose that open and you're able to reclaim it again. This is a week here where you lost it shortly, but then you brought it right back again. But that's not an open that was lost midweek. So situations where you lose it right away in the beginning of the week, it's very hard to reclaim it. So here again, a new week, you lose the weekly open right away on Monday, and then it falls in for the rest of the week, right? And that's usually what happens, is that if you lose that open, this is an exception here, you lose the open at the beginning of the week, you fall into the range, and here the buyers have to really do something crazy. They had a 2.44% day there to try to, you know, to turn that week green. That's uncommon, right? So that week there, let's see what that looks like on the weekly chart. I'm curious here. So this one here, yeah, so it looks like this. All right, so he looks like this chart here. Okay, so here, sorry, this bar here turns into a large hammer, and the reason, you know, why buyers buy down here is because they're going off of the average monthly range low and that 20-period moving average. So buyers step up here to defend at those lower levels, and so that's what gives you levels of support down here that cause them to step up. Otherwise, it's tough, especially if, you know, down here, you know, maybe people step it up down here, but if you're losing the level up here, it's different, right? There's going to be no one to buy because the support doesn't come in until down here. So for now, inside week, let's see where things go, because we got that outside day on Friday. Do we go momo up, momo down, or in some sort of inside situation on Tuesday? Hey, look, I said it right this time. Tuesday. Okay, so let's go TSX now. So TSX, as I've been saying for a while, this is a yellow flag, and this is getting a little bit, you know, still playing out, but we did get the higher high. So TSX, 9 consecutive months of higher highs. 1, 2, 3, 4, 5, 6, 7, 8, 9. So it's red right now, but it is a higher high and a higher low currently. So in order to do the reversal, we are doing the Bollinger Band walk here. In order to do the reversal, you have to take out June's lows. Right? It's a lot of work to do there, but this is the beginning of a reversal if you take out that low. Right? So now, for the rest of the month, if all of a sudden oil begins to rally and gold rallies and we break back above June's highs again, we go higher, yeah, we still got the Bollinger Band walk going in play. That's what I'm saying. It's just the yellow flag still. It's not a reversal condition yet. Now, if we start sinking in here and it gets close to taking out that low, then yes, it's going to turn to a red condition. But for now, yellow condition on the TSX. Watch out. Now, what's potential reversal there? Here, we got the inside bar and up this week right into the average monthly range high. Okay, so now, if you break up below this week's lows, inside bar reversal, you need to watch out for that. Okay, so that's one condition you got to watch out for, is that potential inside bar reversal short condition on the TSX, and this would mean, you know, you'd see lower gold prices probably, and that means the oil is probably weakening as well. So if we see that condition, weak oil, weak gold, then yeah, TSX is probably going to reverse, take out that low, and we sink in because it'll probably be on full time from alignment, because the quarterly open is going to be over here somewhere. Right? Where's the quarterly open? It is now where? Yeah, quarterly opens up here. Where's that blue line? Right there. Where is it? Yeah, here it is. Right in front of me. Right there. So right now we're actually trading full-time from alignment to the downside. So it was red week, red quarter, red month so far, right? So yeah, on Monday, if you can somehow break below here, take out that pivot low, that's full time from alignment to the downside. You got to watch out for that. The only thing is that we haven't turned that monthly red yet. But if we do break below that low there, look, that monthly low is right there. And that's when it starts getting, you know, break below here. Yeah, get ready to turn this yellow condition into a red one if we can do an inside bar reversal short to the downside. Okay. So there's your TSX. Now let's go emerging markets. Emerging markets, really stuck in the mud here. So whatever's going on in Asia, especially China, isn't great because this chart's been telling you that it's basically stuck in the mud. And last month it had its chance to go higher, but they faded it. So June ended up being a red month, even though it's up about 50 basis points. It opened high and then closed right in the range again. So you basically a do nothing month on EM, doing a lot of nothing. Inside month so far, even tighter ranges. So this thing's setting up for something to happen, just not ready yet. Weekly, momo up. So momo up, but they gave it up. So now you're trading. If you break below this past week's lows, it's going to be full time from alignment to the downside. So you got to watch out here. Momo up. If you break below there, momo up, reversal short, full time from alignment to the downside. Watch out for that possibility. I'm not a big fan of emerging markets here. Bonds now. So TLT really was a beneficiary of this past week's trading, and by default, also FAANG names. So anytime long bond is doing well, people are long duration. Long duration means you're long the long dated treasuries, so long dated government bonds, and this also means good for tech stocks, especially GARP names. So growth at a reasonable pace. What that's basically, if you think about those are the guys who are the guys who typically fall in that bucket are the FAANG names, right? So FAANG plus Microsoft, and those guys are rocking today. Well, let's hold off on that, and I'll talk about TLT first. So TLT, inside bar down, reversal. We talked about that already, many moons ago, and now it's going higher, right? This is still an inside quarter though, right? So still inside quarter, has some work to do, and I'd show you the quarterly chart, but my actual TradingView subscription has run out, and I need to renew that, so I can't show it to you right now. But we need to see how the inside quarter breaks, and if it breaks to the upside, then yeah, so long as the TLT continues to make higher highs, you definitely want to be long those FAANG names, because that's the only thing that's been working. That's the only thing that's been really working in the tech space. So those long duration tech names. So inside bar right now, weekly chart looks like this, inside bar and up. So that's a good move there. Although you can see here that it's tightening, right? So the Bollinger Bands here are tightening. So if this is a situation now where if you somehow tag the upper end of that Bollinger Band and you reverse, you can fall back in the range again and create some sort of inside bar reversal. But for now, you still have a bit of space, and you can still move a bit higher here. But that's what I'd be watching for. I'd be watching for it to hit the edge of that Bollinger Band. And that's when I turn that flag to yellow. Or if we break below this week's lows, I'd also put a yellow flag on that, because then we could have sink back on the range. But again, if we break lower, we're likely going to stay inside month for TLT, because this is the big range here for in the month of June. If we fall back on the range, it's probably going to stay inside month. So there's your TLT for now. But going back to what I was talking about for the FAANG names, long duration is, again, as I said, great for FAANG names. So look at the Facebook, Apples, Amazons, Netflix, and Googles of the world. They have been on fire. So let's go through those really fast here. Look at Facebook, monthly charts, all-time highs. Inside month so far, going to all-time highs. Apple, close to all-time highs, right? So really close to all-time highs. Strong looking chart. Can go higher here. Amazon had taken a long break. Now finally, look, inside bar up in June. Inside bar, it looks like we're going to break above June's highs. We're going to get back those all-time highs. Amazon has basically been consolidating in a box here for the past, again, look, since last September, right? So we're basically trading inside of this bar's range. Look, September of 2020, all this price action, even that high, is that high higher? High of what, 35.54, 30. Okay, so other than that little high there, we've been trading entirely inside of September's range. Looks like we're getting above there now, getting close to it. Okay, so watch Amazon for all-time highs. Google, of course, hit all-time highs on Friday. So Google, sorry, I jumped over Netflix, but here you go. Inside month, up. Google, all-time highs. Netflix, okay, struggling a bit here, but still, staying within its range, stuck inside of this month's range here, Jan's range. Okay, but still pretty good, staying inside the upper quartile of the right-hand side of the chart. And the last one, Microsoft, guess what? Yes, Microsoft, look at that, all-time highs, right? So all these big tech names doing very well. I think investors just have to park their money somewhere, and they cannot go wrong with big tech. And that's, you're not taking a huge amount of risk, perceived risk anyways. It could be a lot of risk, but perceived risk is, you can't be hurt as much playing those big tech names. And that's where the money's been going, as these guys have gone to all-time highs. Not an easy feat to do, given the fact that these are, trillion-dollar companies now. Okay, so back to what I wanted to point out is the DXY contract. And so I said, all eyes on DXY this week. And this one here is kind of a head scratcher because the question is the DXY right or is the equities right? And it looks like DXY is actually now putting in a bit of a reversal. So this here now, if DXY continues to move to the downside, then in fact we can see stronger equities. So we do have the higher high on the monthly chart, but look, it's already given up that break above that prior month's range, and now we're fading back in. So maybe we've put in the high now for DXY. Maybe we've gone too far too fast, because that's a decent move there of 2.8% for DXY for the month of June. So here, this is what I'll be waiting to watch, is this. We had an inside bar and up this week, but we gave it up, meaning we had a chance to break above the prior week's highs. We fell back on the range again. Now, if the bears can step up and break below this past week's lows, then that's it for this dollar rally. That'll break lower, and that'll be on full time frame alignment, and that should be very supportive for equities. So there's your DXY on that weekly chart, and we had an outside day to end the week, the trading week and the trading month of June. So we had a higher high here, right? They gave it up, so that's weakness, right? So they stopped out the folks who were chasing, expecting higher prices. They got it, they popped it higher. It came right back into the prior day's range and then through the other day's range, and that creates the reversal there now. And now waiting to see if we get continuation back to the downside. You take out that low there, 91,699, and you get that inside bar reversal on the weekly chart, and that'll be it for the DXY move, and that's going to be good for equities. So even though equities could pull in a bit, right? They could have because it's very extended. If DXY keeps falling lower, yeah, I think equities are probably going to head higher. Now that means, if you look at gold, that should be good for gold. If DXY breaks lower, this should be good for gold. And in fact, gold now looks like it's kind of basing. So right now, gold outside inside on the monthly chart, lots of work to do in order to break above last month's highs. So I think it's very unlikely, given the amount of range you got to do to break above June's highs. I think you're going to stay some sort of outside inside probably, unless you break lower. But you're probably going to be outside inside for the month of June. July, excuse me. But here we got the reversal on the weekly chart, inside bar and down. We started that week inside bar down, but the buyers fought back and broke above the prior week's highs. So now, do we break above this past week's highs? If so, that's a momo up move, and then we're going to chase after those folks up here. All right, so that's a lot of work to do there still, but that would be a real so that would be in line with what we're seeing with DXY. If DXY reverses on the weekly chart, we should see gold basically rally higher, and once again we're going to come back into this range again and chase after these shorts who got short in this region here. So not bad possibly for gold here, especially if we can break above this week's highs. And the gold miners, they kind of bottomed this past week, right? So this past week, look at GDX for instance. GDX right here. So look, on the weekly chart, setting up an inside bar reversal, just like we saw with the, I want to fix this line here, just like what we saw with the MGC contract, the micro gold futures contract. We break above this past week's highs, that's an inside bar reversal for GDX, that's gold miners, and we had the gap reversal that happened right here on Tuesday. See, is momo down, you gap down. Is your gap reversal, otherwise known as a red dog reversal, and that is, this is what the situation here where the sellers get everything they want. You get a gap lower, but you fail to hold that gap. Look at that gap gets tested right here. I mean, it gets extended right there when you hit that average weekly range low. That holds it in. So there's no range expansion there. So it mean reverts back into the range again, and once you get into the prior day's low, there's your gap reversal, and then you get a couple day or actually a multi-session move there higher. GDXJ, so this is the GDX, so that's the gold miners, junior gold miners, same kind of thing, but look at the big hammer that got put in on the week. So here, right? It tests the quarterly open. See how significant these levels are? Can't make this stuff up. So there, right there to the T, tags the quarterly open. The buyers step up just like we saw in GDX. They create a nice bullish momentum hammer to close out the week and month. So that's a nice green hammer now for GDXJ. And again, exact same pattern on GDXJ with the gap reversal here on Tuesday. Gaps lower, right on that average weekly range. Now, right off that quarterly open, you know, there's a quarterly open right there. You can't make that stuff up. Average weekly range, quarterly open. They buy it back, and you get a multi-session move to the upside. So good strength there by buyers. Again, you definitely see the supply and demand dynamics pulling out in those charts. Let's fast forward now, as we've done talking about gold. Let's talk about BTC. So what can we say about Bitcoin? Because this has been in a really tight range, and I'm actually long a bit of Bitcoin now. And I said I was going to hold off on buying some cryptos into the beginning of the month and quarter, and I sort of did. I did kind of leg into some stuff. I'm net long. Actually, yeah, I don't think I have any shorts left on my book. So yeah, so I'm definitely long now, but on smaller size, because I think the Bitcoin charts and a lot of crypto charts have a lot of work to do to fix themselves. But I'm in it for maybe some small moves to the upside, and I'll be a quick profit taker because I don't think we're going to shoot back to all-time highs anytime soon. Right now, inside month, you know, unless you can break above 41,273, that's your big reversal on the monthly chart. If that happens, man, we're going to go higher. That's, you know, if that can happen, we're going higher, but that's still a long ways away. So right now we're trading at 34,724 range and 28 hours left. Sorry, 28 days left in the month. Lots of time to go there. On the weekly chart here, we had a small weekly reversal, but we fell back on the range. But this is what's interesting now, right? So as I mentioned last week, I talked about we had a lower low. I thought that, you know, the best case scenario was that we're going to hold the low that was put in at the beginning of June. That failed. That low here ended up being the low of June, right? So that's a lower low than the first week of June, and that's always nice to see. But look, it fits in the average monthly range. So even though it looks scary, that's actually a normal sized move in the Bitcoin, right? So you see the bands there. That's a normal sized move, and it becomes a mean reverting move, meaning it doesn't break below the AMR, the average monthly range, and turn to a range expansionary move. It's a middle of the road type of move for Bitcoin, believe it or not. That's what the data is telling us. And you can see if the people buy it back again, and that turns into a lower low. But lower lows are not necessarily bad, because what you see here is that, you know, we've drawn these many times before. If this low sticks, and this is actually better to get these lower lows. If the low sticks, then you're going to create the bottom. Possibly you're creating the bottom of a new broadening formation. So if that low sticks, it'll look like this. So if by some miracle, if the buyers step up here and you can break above 41,273, which is the monthly high, then this will look something like this. You're going to have a broadening formation that looks like that. All right. So that's only if this low sticks. If it begins to break lower, then, you know, certainly you can begin to walk down this trend line. But if it breaks above here, yeah, then you have the potential for it to come out the other side. That's just potential. Doesn't mean it's highly probable yet. You still have to work against some of these time frames that are against you right now. So that's something to watch for. But again, it's something just to point out there is that we like the lower lows because we know people are getting stopped out. All right. So and the fact is we got the lower lows, people got stopped out, and the sellers who try to get short, they're getting stopped out too here. Right. So if you shorted down here thinking you're gonna get lower lows, you get stopped out because this is a strong rally. If you actually were a buyer and you're like, okay, I'll put my stop down here, you got stopped out there. All right, I'm going to put my stop below the prior month's low, you get stopped out here. Right, so that's nice because now both sides have gotten stopped out. Now if the buyers step up and they go after it, then folks are going to have to get back in that trade again. So I'm long a bit of Bitcoin here, not a lot, but long in the trading side. And you know, let's see how far things can go on the Bitcoin front. So again, we got the week broke above the prior. We got a week that's broken above the prior week's range. Now, you know, what happens this coming week? We break above or below the current week's range. Kind of a, you know, I would not be aggressive either way here in the crypto space unless things are very, very clean. And I'll give you an example of a really nice trade that I took this past week, and I'll tell you what I mean by clean. So there's your Bitcoin. Let's talk about Ethereum now. Ethereum, or ETH USD. Charts basically are the same, but now you have a momo down, inside bar, so you're not out of the woods yet, right? So you really need to break above 29.10 to create the monthly reversal, and I don't think that's going to happen. And if it does happen, I'd actually be fading that at some point because you're back in the Bollinger Band highs, so that would not be a great situation there. Okay, so ideally, if you're a bull, this thing here, as uncomfortable as it's going to be, is you stay inside month for the next month. So for the rest of the month of July, you stay inside month, so inside the prior month's range, and then going into, let's say, August, you go inside bar. Let's pretend that the month of July ends like this, okay? And then the following month, August, it goes inside bar up. Then you have a lot of space and a lot of range to reclaim. Otherwise, if you break above here right away, you're going right in a Bollinger Band highs once again, and that's probably going to get faded because people are going to get poor trade location, and it's going to be bad market structure. So if you want to see a healthy rally, you're probably going to take another month off, ideally, and then wait for this thing to consolidate further before you pop higher for the bull scenario. Otherwise, bears, yeah, this thing stays inside month, boom, short that guy in August for a move to the downside. Let's see if that's possible. Okay, now on the weekly chart, you did break above the prior week's range, so we're looking for waiting to see how that plays out now. Does this bar's low stick? So this is the low for the month of June, and does that low stick? That is the line in the sand. People are very, very bearish here, but the problem is that the buyer stepped up, right, on Bitcoin and ETH. So until you can take out that low, that's tricky, right? Because you've seen that buyer stepped up around that 30,000 area for Bitcoin. You got to see that thing break down. Same thing with ETH. You've seen this low. It's just significant, this low, and does it stick, right? So there's your ETH lows here, lower low here, and a higher low there. Both sort of, you can see the buyers really stepped up there right against the average weekly range low. Okay, so there's your ETH chart, and here at ETH, you reclaimed the 200-day moving average. So this past week, you're back above that 200-day. So that's significant. So that's how you begin to repair a chart now, is by staying above that 200-day. Now, if you lose that 200-day, that's that black line right here, that would be significant. That's an important level to watch there. You break below that 200-day, you're also going to break below this prior week's low. That'll be significant, right? So then we can see lower prices. So that's the line in the sand I'd be looking at, is this week's low and that 200-day. That 200-day will, is that level that the buyers fought to reclaim. If they lose it, that means they lost control. So for now, kind of mixed stuff going on. You got a green week, but you got a red quarter, red month. So mixed time frame conflict right now. ETH tough going there. Nothing a lot to do, right? It's inside month, and again, I actually am along a bit of ETH, but more for trading than anything else. Okay, keeping my feet, keeping engaged, keeping my powder somewhat dry because I still have a lot of buying power, but definitely want to stay engaged and see where the markets are going here. So definitely dipping my toes in where I can to stay engaged. Okay, so total now. So that's the total market cap for cryptos. Outside and down, that's momo down. Inside month so far, lots of month to go. And on the weekly chart, this is the kind of a little bit more bullish, right? So you tag the bottom of the band of the average monthly range. You got momo down, inside week. Now you break above this past week's high, that'll actually be a momo up reversal. Sorry, momo down reversal long, and that'll be actually on full time from alignment. So would be the bullish case here. That's actually kind of bullish, because if you break above this bar's high, you're gonna have full time from alignment. That means, if you can break above this bar's high right there, that's the blue line we talked about. It'll be a green quarter, green month above the 200-day moving average, right? And it'll be a green week as well. So that would actually be very, very bullish if that happens. So if you can clear above that $1.485 trillion level, very bullish there. That's actually not a bad place to be looking at. So again, it will be significant. Okay. Now one more index before we get to the what I talked about before. A good example of a trade here. So here's a SHITPERP. We like looking at this chart because it shows all the shit coins and how they're trading. Right now, inside month, not a lot to talk about. 2 red months in a row, 2 lower lows in a row, lower highs. Inside month so far. How do you get outside that range? We were talking about that range, right? Are you inside of a range, or are you trading in a range expansion mode? So how do you get outside that range? Okay, so how do you get outside that? Weekly chart, inside week, very tight stuff, right at the bottom of the average monthly range. Okay, inside week, you break above there, that's bullish. Okay, that'll be bullish because you're gonna have full time from alignment, right? If you can break above that week's high, this past week's high, right there, it's gonna get you back above the quarterly and monthly open. The issue right there is that 200-day. So unlike the total chart, the SHITPERP chart lost its 200-day. Remember we said that a couple weeks ago? It broke below there aggressively. And can the buyers begin to repair it to get it back above there, because a lot of people are going to be looking at that level as a judge, as an indicator of whether or not to be long or short. Are we in a bullish or bearish kind of market? So that 200-day, that's the work it has to do. But if you can break above that, that would be significant. So that's the level. If you can break above here first, the prior week's high, then stay above the quarterly monthly open, then can you challenge that 200-day? That's right. Let's see. That's, you know, that's far away, but that's what I'm looking at that in terms of the level. So for now, I'm keeping my powder dry. But I am taking setups that are very clean. So this past week, you know, this is one that I spotted, which turned out to be very, very nice setup. Right here, Axis Infinity. So AXSUSDT. They are a DeFi project. Well, more of a blockchain game. Axis Infinity. Basically, you can play something like it's kind of like a Pokemon game, but on blockchain. You can trade characters, trade equipment. And even now, the big news this past week for Axis Infinity, such an interesting space, right? Such an interesting space. You know, people actually are earning real incomes by playing this game. Now, obviously, if you live in North America, you can't get a big enough incentive because the cost of living is higher. But for instance, you have huge swaths of a lot of people internationally. There's good stories of folks, for instance, in the Philippines, who are playing this game full time and actually making more money in the virtual world than they are in the real world. So that by playing, you know, a few hours a day, they can make more in terms of a living playing that game, trading, you know, the commodities that are inside that game, than actually, you know, finding work and working in the physical meat space. Crazy as it is, and that's I think that's just the way the direction of the world's moving. Is that I think all of us. Again, if you're a trader, you're working virtually anyways. So what's the difference? Here they're playing inside a game. You can't tell me that trading is not a game, right? So yeah, so it is linked to a quote unquote real world. But again, that's again a distinction that may be fading. So these folks are making real money and they're supporting their families, and more power to them. This past week, you know, the tokenomics of that past couple weeks, the tokenomics of Axis has changed a bit, and they're making even more incentives for the players and for people to earn yield in that game. So very, very positive news for the fundamentals of that, and that's, you know, why showing such a demand. In fact, you know, Axis Infinity now is the biggest DApp or distributed app on Ethereum. So this thing is the biggest app on Ethereum right now. It brings in the most amount of money. So anyways, enough about that. You know, obviously I'm very I love tracking these blockchain plays because there's so much potential out there. Such a new world. So let's go to look at the charts here now. As traders, what do we look at? Here I got involved. You could have gotten involved in a couple places, but here's where I got involved. So here, if you want to try to catch a bottom, that's the absolute bottom right there. Not the absolute, obviously the bottom's down, you know, happened down here, but here you can catch it and actually get a move. Here you catch a bottom down here, you got to sit for multi-weeks. There hits the average weekly range low, it pops back up. There's your, you know, that's a gap. Well, because cryptos don't gap, this is a reversal. This is like literally catching a bottom, trying to catch that bottom. That works. Otherwise, if you don't want to try to catch a bottom that's less confirmed, you can do something like this here, which is where I got involved. I buy the momo down move, starts off as a red day, turns green, and then it breaks above the prior bar's high, extinguishing that momo down move. And look, right off the 200-day moving average. So right off the 200-day moving average, and boom, there's that move. You put your risk, put your stop below that bar's low, you buy above this bar's high, and now you're up plus 8+R on that trade. So not only that, so that's one part of it, right? So that's the one part of the time frame analysis. But again, we were looking at the weekly chart, and you see this, right? Inside bar down, correct? A break above that high is an inside bar reversal. So you add on that as well. So inside bar down, you break above here, it's an add. So you're now long, I'm long from this level on the daily chart, from that pivot, and long from that pivot there on the weekly. And you could have added, I did not add, but you could have added on the break of the inside month and up. So that's, you know, a confluence of different time frames showing you there's buyers across all these time frames, and it's all happening with, for the most part, other than this here, we had a way up here. Look, that was the quarterly open. There's your monthly open. So we did hit a bit of resistance here at that quarterly open, but it broke above it on the 1st of July. Now we're trading above it. So now it's a range expansion above those areas, full time frame alignment with the upside. Yellow flag here now. Honestly, you know, I've been taking some profits because now you're trading right into the Bollinger Band highs. Right, has to keep going here. You know, these are nice. I'm still long. Again, this is having a great day today, up 22% roughly. But again, worry if it does a Bollinger Band walk and fails, I'll be out of there. And you know, I caught the meat of that impulse move. Right, so maybe it continues this way, does a pullback like that, and continues higher. That's what I'd be watching for, excuse me. But I'll be quick to take profits here now as I'm sitting on a pretty nice trade. But I'll keep a small portion and see how long I can ride that thing until, let's say, the weekly trend breaks. All right, so there's, you know, again, an example of a very clean move. Maybe something similar to that is something like eGold USDT, looking somewhat similar, although it hasn't broken as cleanly on the monthly chart yet. The monthly chart, inside month so far, so got a lot of work to do to break that inside month. But going back to Access really quickly, right? So how do you fix these charts? That's what I said before, is you fix the chart by taking out a monthly reversal, by doing a monthly reversal. That means taking out the prior month's high. That's why I was able to do it. It took out the prior month's high, and now it's, you know, that's a lot cleaner. Now this is probably going to get stuck inside this. All right, so this is going to get stuck at some point, unless it goes gangbusters, which would be amazing. I'd see it having a hard time breaking above May's highs there. But you know, that's the situation here now. You have a good monthly reversal, which causes you to have this fantastic 30% move here for the month of June. Now going back to what I was talking about was eGold, EGLD. USDT. Here we go. So it's an inside month, so you're kind of stuck there. It's not going to be a big reversal, but so far it's been a nice move so far, right? So here you got the inside bar reversal on the weekly chart, but it begins here, right? Boom. So watch. Inside week and down, there's your pivot, right? So you break above that level there, 80.87, it creates the inside week reversal to the upside. Right, look, 80.87 right there, that level. If you buy that, and you can, if you buy that, it goes one day in your favor, inside day the next day, inside day the next day, then it pulls back. Some people get scared out. This is where they get scared out here, right? And this is why that's, you know, I often call it, and it's often known as the second mouse gets the cheese. So you buy the breakout, you have to sit through a breakout that fails a bit. Doesn't necessarily completely break down, but it goes nowhere and you get nervous. Some people get out as it breaks back into the range again. Here is your second mouse gets the cheese. Double inside bar down. That's an inside bar break to the upside, inside bar reversal right there, and boom, there's the move. So you buy right there, or add right there if you're already long from the 87 area, 80.87 area. All right, so a couple examples here of clean trades, clean moves, and that's how that's one method I use to trade cryptos. So pure price action based, along with the alignment of time frames. So I hope these little examples help. We've reached the end of our time together today because I've gone a little long. So thanks once again for tuning into this week's video. If you enjoy them, please give it a big thumbs up. Smash that like button on YouTube. Click subscribe so that you know, we continue to grow this community of traders and folks who are like the price action that I'm sharing today in these videos. And as always, you know, if I can make these videos any better, let me know by dropping a comment, something in the comment section on the blog or on YouTube. And again, if you like it, and you know, if you think other people can benefit from it, feel free to share these videos. So, wish you a great trading week. If you're stateside, happy Independence Day. Enjoy the time off. Enjoy the festivities, and we'll talk to you again next week. All the best.